Hey everybody, it's Thursday, February 25th. You're watching SmallCapSteve Live. Really excited. We've got a great guest today. Jay Martin from Cambridge House is joining us, who's, he's got a track record of interviewing some of the great financial influencers out there and CEOs and even Stephen Harper. So lots to talk about. We don't have Jay joining us. I'm going solo today. So buckle up. We're about to get started. It's going to be a fun time.
Looking forward to it, Steve.
Jay, thanks so much for joining us. I don't know if you were thrown back by that little intro there.
Clearly, I need to redo mine. I was like, what the hell's going on here, Steve? That's exciting. I love it.
That's my producer, Chris. The stuff they come up with is just, it's incredible. We had Craig Hemke, who's Turd Ferguson Metals, on last week, and he was just like, what was that?
It's exciting. I like it.
So Cambridge House, you guys were or are an event sort of, that's kind of the folks of the company. You guys hold these big events, big speakers, sort of investing, macro focused, and then COVID hits. How's the last year been for you?
It's a good question. It's been awesome, Steve. Yeah, we were a live event production company. We hosted investment conferences all throughout North America. Biggest shows in Vancouver, Toronto, San Francisco, Las Vegas. But we've been everywhere, maybe, 15 cities in total. We'll go wherever the market's hot, with the purpose of helping small cap companies access cash, right? And conversely, helping small cap investors find opportunities. So when COVID hit in March, the fortuitous piece of that was that we didn't have to wonder if our business would be impacted, right? Being a live event production, I have peers in all sorts of industries who didn't get impacted till 3-6 months down the road. In live event production, as soon as there was a global pandemic announced, like we knew, I call the team huddle, told the team probably 18 months before we run an event again. And, the fortuitous part of that, Steve, is that I'd been trying to allocate my time to developing our digital assets, spending more time there. And that's all that I get to do now. I essentially got to keep the best part of the business, which is having interesting conversations with, industry gurus, investment experts, fund managers, money managers, company CEOs. I'm an investor first, so this serves me most. I get to due diligence sort of live on my channel, but I got to keep the best part, which was the part when you get up on stage and have a rad conversation with somebody and get to learn from them. But I don't have to book venues and negotiate with unions and AV companies and caterers and all that stuff. So yeah, silver lining turned out to be, a great thing, not just the upside of a horrible situation, but for us, we ended up being a quite large benefactor. We'll do events again, when the time comes, when we get green lighted, we'll do some stuff. But right now, I just love what we're doing. So no rush.
Yeah, for us, it's just been total madness. Like we were like, oh, we're gonna have to go find like new jobs or something like that last March, and then it just all these companies started reaching out to us saying, "Can you guys help us tell our stories online?" And we were just like, in some cases, we worked with a couple of the tech companies that we like and pushed hard, but it seems like there's just been this whole frenzy of retail investing since COVID started, and I think like it's almost counterintuitive. I would have thought that. Everybody would have been like, the world's coming to an end. Why do I want to be long equities? And it's just been the total opposite.
Yeah, no, absolutely. And I mean, companies have been, it's been a good market, especially in the resource sector. So these companies are cashed up, healthy marketing budgets, far less options to allocate that capital towards, right? There's no live events, there's no matchmaking conferences, there's no road shows occurring. And so they have to get creative and it's good, right? I mean, essentially it's opened up our audience, our industry to a far larger audience. And that's been great.
So So let's talk about investing first. What are the kind of like investments that you're looking for that sort of meet your criteria?
Well, I like to get in early. I like the super high risk, super early stuff. Typically, I look at the public markets. I look at a lot of private companies as well. If I do, I like to see some kind of a liquidation event, in a time horizon of maybe 18 to 36 months. And what it always comes down to for me, Steve, is who's steering the ship. Because as you know, in the small cap arena, it doesn't even matter so much what the product or the service or the commodity is the company is focused on, the project, because it's whoever's going to be making the key decisions that's going to determine success, right? A mediocre management team can make a mess of a fantastic project. And so I lose sleep over finding the right people. And in addition, and then I want them to lose sleep over the project, right? But I think it's really important for every investor to understand what kind of investor you are, and I run a conference company. I have conversations for a living. I talk to people for a living. That's what I get to do. I'm really fortunate. And as a consequence, I know the people in the business, everybody from the money side to the entrepreneur side, the analyst. I know that's my network. And so I leverage that extensively. I play that hand because that's the hand that I have. And it serves me very well, And so, but I tell people all day long, don't lose sight of that. If you're investing in that early stage, early stage companies, you're investing in the judgment and decision making of one or two individuals that are going to be having that adventure with your cash. So do you trust them to only chase the best business opportunities, not the good money after bad, not, be found to have egregious G&A and all the downside that can occur. But when it comes to sectors, I like everything. I like to invest with the tailwind, obviously. And so I'm very conscious of the macro trends that are supporting the industries I'm looking at, whether that's, something in the commodities market, whether it's something in the innovation sector. I do look at everything. But personally right now, I'm very invested in the commodity sector, and I'm looking very aggressively at the health science sector.
Okay. A few questions that just kind of crossed my mind when sort of you hearing or talking about your network. And it's a conversation I was having with a friend on the weekend who happens to work for a small cap publicly traded company. And they're saying to me that, a lot of these small cap companies in Canada, they've kind of just turned into these wealth transfer vehicles where you've got some really bad deal makers who are behind it. And their whole goal is to rope in retail shareholders into investing into these things where they get to, sell their 1-2 cent paper at like 50 cents. Do you have any sort of ways that you avoid working with these people or just advice you can give to retail shareholders to avoid these sorts of like traps?
Yeah, 100%. And you're right. There's a ton of landmines in this sector and a lot of people who have bad intentions because it's relatively easy to fleece the lamb, so to speak. I mean, it's not unknown. So, buyer beware. It's a very high risk market for a ton of reasons, not just the likelihood of a company to succeed or fail. There's a lot of hustlers in the startup world, private and public, tech, mining, every industry, right? There's a lot, money side, entrepreneur side. So, I'm not against betting on the rookie. For most of my career, I've been the rookie soliciting bets, but I'm much more comfortable when I see success on the track record. And you pay a premium for that, right? You're not going to, you talked about getting in on the 5-cent financing. Yeah, if you got the risk tolerance and the wherewithal, go for it. But the best entrepreneurs in the business that have already done it once or twice, I mean, success begets success. And so I want to look at individuals like in the resource business. I'd call up somebody like an Ivan Bebic. If your audience is familiar, Ivan, has two successful exits to his name in Caden Resources and Keegan Resources, companies that he built and sold for 500% returns in a terrible market. And then Ivan founded Orin Resources, which he's since split. Orin was a sort of a, diversified exploration company with copper, silver, gold assets. And last summer, he split that company into three. So now there's Fury Gold, which has the gold assets, Tier 1 Silver, which holds the silver assets, which will be listing soon, and then Sombrero Resources, which holds the copper assets. But all that to say, I look at a guy like Ivan, he's done it twice in a bear market. I have confidence that this is an entrepreneur who does what he says he's going to do. And as a consequence, I can't invest in Ivan for 5 cents. I pay a premium, but I pay a premium for confidence, and I pay a premium for experience and track record. Someone like Ivan, you look at the shareholder base, he's always attracting the smartest capital in the business. Ross Beatty's always been a big shareholder of his companies, for example. And so I encourage investors, especially if they're new to the space, don't get drawn to the cheapest paper, right? Look at the entrepreneur, look at their track record, look at the shareholder base. Who else has written a check before you? If you're new to the sector and you know less than most people, then, have a look at the shareholder base and say, who else is in there, right? Whose lead can I follow? And that's a great way to introduce yourself to the sector.
Mm-hmm. So I think next, how important do you think social media has become in storytelling for companies? Do you think that this is something that they all should be focusing on? Do you think that that the investment will take care of itself if you got the right people and the right fundamentals? The investors will find you. What's your sort of thoughts on that?
Yeah, it's a good question. It's a bit of a rat's nest, isn't it? The whole digital marketing world these days. It's very difficult to measure ROI. There's tons of options. There's tons of agencies offering packages, and most aren't very good, in my opinion. And I say that as a consumer of these services, right? We contract a ton of digital marketing agencies to help get our messages out, and I look very critically at the results. And I would say that it's definitely an important like supporting role in the marketing plan. And a good company will raise the money through their connections, through their network, the confidence of various banks and investors. But when it comes to generating retail support, it's highly important that companies are consistently in front of new investors, because what retail wants to see is liquidity, right? And you gotta stay front and center to maintain that, and continue to onboard new shareholders. Every time your price goes up, somebody wants to take cash off the table, and they should. That's the reward for having confidence in you. But you've got to constantly be replacing that shareholder base and keeping your message front and center. And you've seen this 100 times, I'm sure, Steve. A poor company with great marketing will still raise money, for better or for worse. But great companies with great marketing, they always rise to the top. And so you look at entrepreneurs like Amir Adnani. He's another entrepreneur that I have a lot of confidence in. Gold mining and newly going public on the NYSE, Gold Royalty Corp. He's also the chairman of Uranium Energy Corp, Uranium Royalty Corp, a handful of companies. That's an individual who's remarkably hardworking, remarkably confident, remarkably competitive, and on his own, he's a beast. But he markets harder than any other entrepreneur in the space, because he understands the importance of doing both. And public company CEOs, they have a hard job, right? Not like you and I. We have to build our business, manage the team, build the products, get the services out, whatever. That's hard, right? That takes up your life. But public company CEOs have to do that and keep shareholders pacified, right? Keep shareholders aware, and that's a whole another box, highly important. So it's very infrequent you find a CEO who can do both really, really well. But when you do, stick with them.
Yeah, it's interesting you say that you look at companies who do this stuff critically, because I before this interview I was chatting with a guy who's been chairman of an NYSE company and is now looking at getting involved in the Canadian small cap arena, and was asking me questions about digital marketing. And I was like, this is if you call 10 different people, you're going to get 10 different answers. And I just recently saw a company spend $500,000 on a campaign, and it generated nothing. In my opinion, the deal itself didn't work, but it just like there's value there, and there's a right way to tell stories. It's just trying to wrap your head around it. I find really interesting, and that's sort of why I admire what you guys do is you guys are getting real investors in front of companies so that they can tell their story and do things the right way. Whereas like what a lot of these other things that I'm seeing companies doing is, effectively just paying to, $500,000 a month. In a lot of cases, we saw it in cannabis, was being spent like crazy to, drive investors over to a zombie site that would, say that some cannabis company that's really just a shell is going to be the Amazon of cannabis, and and hopefully, that generates enough money to get the deal guys out at the expense of retail shareholders. But even if it's a real deal, it's still I still struggle with how you go about assessing that. So I appreciate your thoughts on that.
Yeah.
I won't go too much further into that, but so you presumably you get up every morning, you check the markets. What media do you look to try to think about your investment ideas?
Yeah, almost exclusively Twitter is where I live when it comes to, finding new insight, new information. There's just no other platform when you can curate a list of individuals who you respect and agree with, and also highly important, a list of individuals that you disagree with and have contrasting opinions. And it's where I validate a lot of my sentiment. It's where I gauge sentiment. I mean, as a people-driven investor, I'm always conscious of sentiment, right? Where is the puck going? And I mean that avalanche of retail cash. I want to be there first, right? I don't know of a better platform than Twitter where you can see that in real time. You can see manias budding in real time. Like Bitcoin's a great example. You see the evangelical rise of sentiment right now. And it's amazing how it peaks and valleys with the Bitcoin price on Twitter alone. The voices get loud or quiet depending on what the price is doing. But in terms of a sentiment gauge, I go there and I trust it probably more than anything. And it's the most, yeah.
That's interesting. I'm generally the same. I spend most of my time focusing on Twitter. I was thinking about this last night. Is Reddit like its own Twitter, or do a lot of the Reddit people get their ideas from Twitter? Like if there's one platform that all the other platforms kind of get their ideas from, to at least some extent, I tend to think it would be Twitter. But do you think that that's just my bias because I use Twitter?
Yeah, I don't know. And honestly, when it comes to Reddit, you're asking the wrong guy. I'm not super active on that platform. I probably should be. I just haven't, done it yet. But yeah, outside of that, I probably consume a lot of the podcasts and video casts that you do. Real Vision's exceptional. The Investors Podcast is exceptional. Macro Voices with Eric Townsend is exceptional. Everything Grant Williams does is great, especially his new podcast, The Endgame. Highly recommend that anyone who cares to pay attention to the macro finance trends. I mean, no one articulates better than Grant Williams. He's one of my favorites, and we recently just had him on the show again. We'll have him on a few times every year, but yeah, personalities like that, like you stick to. When we were talking about like following the best entrepreneurs in the space, I do the same thing with the calling the analysts, right? The individuals like Raoul Pal at Real Vision, like Grant Williams. You never miss their opinion. You find those voices you trust. You find a few that don't agree, and then you stick to them. That's a great strategy that I employ, and it works very well. And Twitter is a great place to stay on top of those individuals in addition to their newsletters and external content. But the same as I track entrepreneurs and financiers in the small cap space, I also track those personalities whose opinions I respect in action, and that's done very well for me for sure.
Is there anyone who sticks out for you? Is like you see an interview with them on YouTube and you just have to stop what you're doing and you're just pumped to see them? For me, it's Kyle Bass. I'm curious if you got anyone like that you're just like, okay, I got to watch this.
Interesting. I mean, it's kind of a moving target. This year, I have spent a lot of time with Lynn Eldon. She's fantastic. Yeah, and I think, the biggest rising star in macro this year. I think a year ago, she had something like 12,000 Twitter followers. And I don't know, today, 200,000. I've got no idea. But, she's all over Real Vision. We've had her on several times. She's now partnered with George Gammon at the Rebel Capitalist, and they produce great content. So, I don't know if there's some of the names I mentioned now, right? I pay a lot of attention to Raoul, a lot of attention to Grant, a lot of attention to Lynn. This year, I've really gotten to know Jeff Booth, author of The Price of Tomorrow, the book that really took macro by storm this year. And, as a consequence, Jeff's been on every podcast that matters this year, and he's been on ours a few times. And, super smart individual. Came, background building Build Direct from his garage up to a $500 million company, and then now he's in other ventures. And then in the space, it's there's a lot of smart money that I watch. A lot of the personalities that we have on, from Adrian Day through to Rick Rule, Marin Katusa. These individuals who put their money where their mouth is. I mean, that's kind of the criteria, right? If you have a loud opinion, you better be backing it up with your wallet. That's, I guess, how I feel about a lot of these personalities.
Yeah, Lynn Aldine, is it pronounced?
Alden.
Alden.
Yeah.
Well, yeah, I've read a bunch of her blog posts, and it just breaks my brain. Like, I'm just, it's so thought provoking, and she does such a great job of laying out, these complicated economic ideas involving monetary policy that I'm just, I get a little bit lost in it. So it sounds like you're an incredibly busy guy. You're talking to all these important people, investing, thinking about, okay, what should I be adding? What should I be exiting? I'm curious. Do you have issues with when you get around your family or friends connecting and just turning your brain off?
Probably. Yeah, most likely. But thankfully, most of my friends like to talk about this stuff too, so it's pretty beneficial. Yeah, it's funny. The quote I would point to in that regard is it's actually Neil deGrasse Tyson. Somebody asked him, "How do you manage the work-life balance?" And he's like, "There's no work-life balance. You manage the unbalance. That's what you do." And I think my wife and I do that very well. We have 3 kids under 5. It's chaos every day in here. I work from home. My studio is here. Through a set of glass French doors, there's 3 toddlers running around tearing my wife's hair out. So it's always chaos, but it's fun, right? And it's the pace that I think is this season of our life. So and all that we do, on the Cambridge platform, all the interviews all the people we talk to, all the activities we engage in, it's got to serve me as an investor. I mean, you got to know your why, right? Like, why are you doing all this stuff, right? Why are you building the business? Why engaging in all this, sending out all this energy. For me personally, it's got to serve me as an investor. That's the core of it all, Steve, and that's the driving force, right? And so if it ticks that box, then I'll consider it. Will I invest energy in this activity? If it serves my portfolio, if it serves me as an investor. And I think that's why our content resonates with our audience, because, dominantly they're individuals just like I am. I run a small business. Yeah, I've got a young family, all this. I'm just trying to find the best home for my capital and build my portfolio as best I can, avoid landmines, find those unique opportunities as early as possible, and stress test my ideas with the smartest people I know. I'm just fortunate that I get to do it publicly on a platform, and as a result, reach out to some rad individuals.
Mm-hmm. Yeah, let me think. I had like 10 questions cross my head there with all the one thing I thought about with the toddlers. My son turned 4 yesterday.
Okay.
He's probably got to hang out with other kids in person like 7 times over the last year.
Yeah, it's hard, isn't it?
And it's been especially with everything that's going on. His birthday yesterday, we have this Zoom call, and it's just all these kids. None of them could focus. My wife's trying to like structure a birthday party. And it's just got me thinking, like, what long-term impact is this going to have on toddlers who have had to spend a year like having their birthday parties? Like, this isn't like, we've been on a few kid birthday parties over Zoom in the last few months, and they never really go well.
I can't imagine my 4-year-old stick around for a Zoom birthday party, but
yeah.
Yeah.
So you talk to a lot of, really important people. What takeaways have you had? Like, has anybody ever like made any, told you any stories or anecdotes that you kind of walked away with and said, okay, that was like really, really thought provoking, and it's really resonated with me?
I don't know of any specific examples that come to mind, but, I love getting war stories out of investors and entrepreneurs. Right. And maybe because I could relate, like just this year alone, we've gone through our own pivot. But, as an entrepreneur, there's more dark days than there are good days. That's for sure. You just hope that the good days outweigh the bad days, right? Because they won't outnumber them. But the payoff should be worth it. And that's where I really like taking the conversations. Not every guest is comfortable going there, right? Not every guest wants to talk about the reckless decision that didn't pay off, the mistake they made, the bet that they lost, all that stuff. But we all, as human beings, I think, love that underdog story. And so when I can get a guest there, it's some of the richest content we can create. And you can find that from investors who fell in love with the story, improperly, from entrepreneurs who were on the ropes. I mean, who was I talking to? Oh, so Frank Justra has a phenomenal story about being minutes away from losing Lionsgate Films because he was inexperienced and did a bad deal when he structured that company. And this is one of Canada's most respected and successful entrepreneurs in a variety of industries. A lot of us know him for his contributions to the mining space, but Lionsgate Entertainment's a beast. Dominica Fiore Olive Oil, Modern Farmer, like he's all over the map, right? Nude Vodka Soda, he's an early investor in so many things. And individuals like that, he's got enough confidence that he's okay sharing the darkest hours of his entrepreneurial journey. And it gets dark, or even somebody like that, you can look at and be like, he's just got the secret sauce. He always wins. He knows what to do. But he doesn't, and he's just like us. He's trying to figure it out as he goes. And he's just comfortable making bets, comfortable swinging first and asking questions later, that ready, fire, aim mentality, right? And as a result, he's almost lost some of the most important businesses he's built. And, I can't recall all the details, but telling a story about being in a hotel room, waiting for a phone call from a lender that he wasn't able to pacify, and he had to put up Lionsgate as collateral, and he was literally minutes away from losing a company that now is $1 billion business. But those are the most fun, for sure.
So you run a business that is just, I'm sure it's just completely hectic, and I'm guessing that you are somebody who is incredibly organized. Would that be a fair statement?
No.
I
don't know. I mean, it's all it depends, context. But
okay. So what do you like, do you have any habits or tricks that you can share that sort of keep you like, I feel like with all the events and all the things you have going on, like I wouldn't be able to sleep at night. I'd be stressed out about a million things. How do you manage that?
Well, fair share of nightmares, for sure. And it's funny, there's like a typical event production nightmare that anybody in that business can share, where you show up at the conference and you realize you forgot to book the venue or something. It's a nightmare that we all have, or that just no one showed up. But yeah, I mean, I'm pretty lucky, Steve. I have a great network that I've developed, and I actually have 3 sort of groups that I meet with on a monthly basis, and they kind of serve me as personal boards of directors. And, by design, there are various life and business stages. I've got one group that I meet with that's, all a couple decades my senior. And I just am really lucky they spend any time with me, but, they've all sort of built and exited companies, grown, raised families. And we meet monthly and we just talk about the deepest parts of life, your top 5%, bottom 5% business successes, big business failures of just that 30-day period. Same thing in your personal life and in your family life. And I have 3 of these groups just because I'm super selfish and I love it. And they're all at various stages. Some are sort of in my zone, where young family, growth mode on the business front, highly aggressive and type A. And then another that's more holistic, chasing, I guess, bigger life goals, right? Like, what are you really after? Big picture. What do you want to contribute? And do outside of just your business, which so frequently defines us as entrepreneurs, and it's not the whole picture, right? It's unhealthy to think that way. So those are all very beneficial. And I peer-to-peer learning's been huge for me. I work with a performance coach. I love that too. And I have a personal dashboard. I mean, anyone. Rockefeller Habits is a great resource that I've applied to my life. And I have a personal dashboard that I spend 30 minutes on each morning that sort of walks me through my near-term goals from my 3-year vision, my 1-year plan, and then my quarterly rocks. And then what do I have to do to get there, right? You've got your vision. And then, so if I want to be there in 3 years, what's this year, what I have to do this year. And if I want to be there in a year, what I have to do this quarter, and then from there you drop that down into your weekly deliverables. And I track everything from, how present I am with my kids to whatever rev targets I'm working on at the business, and so on and so forth. My portfolio goals, personal wealth goals, health and fitness goals, there's all that stuff. And I would say I'm not super analytical, but I measure everything so that as like a protection mechanism against that, right? What you measure, you improve. Like we all know that, right? And if you stare a goal in the face every day, you will hit it. Like we know that, if you build a strategy, do the things, you'll get there, right? And so what that does for me is just make it very visual. Every single morning I'm staring in the face of what I want to accomplish, today, this quarter, this year, and then 3. It's a very, very therapeutic exercise and helps me stay focused.
Okay, so 2 more questions. One, what commodities are you the most bullish on?
Right now, I want to say uranium, and I know that that's going to be met with enthusiasm, bullish and bearish, just because of the nature of it. It's been a long depressed market with a very loyal, fan base. Whenever we host uranium content over the last decade, it's a packed hall. Doesn't matter how depressed the prices are. It's amazing. It's like silver bugs, but just a bit different. And so I don't know. I mean, the reason I want to be bullish on uranium is because I want nuclear to be in the conversation. I think it's been a very misunderstood energy source for my entire life, and it's been really unfortunate, because if you don't choose nuclear, you're choosing something else. And for my lifetime, that choice has been coal instead, which I think is a very poor trade-off. And, we're looking at nuclear energy. It's amazingly efficient in terms of energy output per square foot, produces 0 carbon emissions. It's a miracle technology. Unfortunately, there's been some significant black eyes along the way, but that's occurred in every energy source, and often I think media runs far harder with nuclear disasters than they do elsewhere. I don't know why. I was talking with somebody yesterday about this, and they joked, like, well, it's because we all, I'm 36. You grew up on The Simpsons. Your perception of nuclear is Homer Simpson asleep at the wheel with nuclear waste leaking out of a canister. Well, maybe it's not far from the truth. That probably has a big impact. But I'm seeing that change. I'm seeing that perception change. And, with an administration in the US that's highly focused on converting to renewable, I think nuclear is that piece, right? So yeah, it's massively undersupplied if we keep moving that direction, and that's what you want to look for. So looking very hard at uranium. I'm quite invested in gold. I'm quite satisfied with my gold portfolio. I don't know, I'd be adding something here or there, but I'm kind of loaded up, on gold and silver equities right now. And I look at the copper market. I'm quite specific with how I allocate cash that direction. A company I love and have had on the show for last year consistently is Nova Royalty. It's a story a lot of people are familiar with today just because they've had a crazy 6 month. I mean, they've done 5 acquisitions in 5 months. They're a copper nickel royalty play. The reason I like them, Steve, is just because, I mean, we could talk all day about the copper demand story and why you might want to be bullish on that commodity, but picking a copper exploration company is a lot more difficult than not as straightforward as picking a gold or silver company. They execute differently. And it's important to recognize that the whole system's different. It's just, it's a lot more capital intensive, a lot more time intensive. As a result, there's far less exit strategy options for these companies. So you have to pick the really strategic ones. What Nova's done is they're just purchasing third-party royalties. And so it's like a nice entry point to get exposure to copper and nickel upside. And that's reflected on the share price. I think we started having them on the show. Alex Sukernick, the CEO, is a beast and great vision. And he's been very, very aggressive, which I appreciate. So that's kind of what I'm looking.
My partner Jordan and I, we've been burned on a couple of junior mining gold deals where they raise a bunch of money and then they do their drill program and it would be like 10 holes, and it was like, well, there's nothing substantial enough to really, unless you're like gonna like trick us and twin a hole or something. It seems like that's just a bad idea, at least from we're new to investing in junior mining. Do you have any rules that if you're investing in an explorer that the drill program has to be of a certain size?
Not any hard fast rules, no. Although, I'll always go for scale. It takes just as much work to get a large project, to push a large project forward, as it does a small one, and the large ones just pay more. So, you'll find that with consistency if you follow those top entrepreneurs all the way up from a Ross Beatty, to someone like an Ivan. They're always hunting scale every single time. So highly important. And, when you look at the capital raise, I'd always factor that in. If a company's consistently raising just a few $1 million, I'd probably stay away from it, right? I want to see enough cash in the treasury that can complete a sizable exploration program. And so that's not going to happen with $3 million, right? And you'll see that with individuals like Mark O'Day, and none of the companies that have oxygen will do small raises for a reason, right? They like to get to work when it's time to work.
Got it. Wish we would have had this conversation a year ago. We primarily were focused on the cannabis sector, and now I'm of the belief that we got a commodity super cycle coming. So it's going to be a fun time to invest in mining. So we're spending a lot of time learning, and so far we haven't found our Great Bear resources, but the one takeaway that we've had is exactly what you just said. You want to make sure that they've got enough cash in the till to do something sizable. One last question for you: if investors or our audience wants to watch some of your content, where's the best place to check you guys out?
Yeah, we're Cambridge House on YouTube. That's our channel, and I'm there almost every day. We put out content about 4 times a week these days. And you can find me on Twitter at Cambridge, and inconveniently, I'm at jmartinbc everywhere else, to the frustration of our content marketer, but it is what it is. So, but yeah, I'm active, very active on our YouTube channel. That's kind of where I live. We're putting out tons of content, and then I publish a weekly newsletter where I just distill, give my perspective on the conversations that I've had, my key takeaways, the advice that I'm going to action. If I'm I'm taking a position in the company, I often talk about it. If I'm just looking hard at the industry but haven't found my opportunity yet, I talk about it. All that stuff happens in the newsletter. And you can sign up at cambridgehouse.com or jmartin.club, a variety of places. But yeah, I live on the YouTube channel, on Twitter, and through my newsletter.
Awesome. Well, thanks so much for taking the time to do this. This was really fun. I found myself getting a little lost. I was listening to what you were saying that I'd forget my next question, and which is normally that doesn't happen to me. So that's a sign of how engaging you are. So for our audience, we don't have Jay Lutz, a different Jay, covering microcaps with us today. He couldn't make it, so we're not going to do that today. And just a quick little disclaimer: nothing that's said on the show is intended to be financial advice. For informational purposes only. If you're looking for that sort of thing, I suggest you go find a licensed financial advisor. And if you guys want to join us tomorrow, we're going to have Emily Paxia from Poseidon on, one of the top cannabis funds in the U.S. And she's a total rock star on CNBC all the time. So really excited about that one. Thanks to Jay Martin for joining us today. And we will be back tomorrow to close out the week. Thanks for joining us, everybody.